Good day, everyone, and welcome to today's markets fundamental and technical breakdown. My name is Anthony Phillips Njoku, and I'm the founder of 10x Digital Lane, where everyone who has knowledge gap in digital trading and also real estate can be able to learn the right information that will give them responsibility and control on how to make money in these industries. So today we'll be diving into the technical breakdown first, and then we'll move over to the fundamental breakdown because I believe that the market is driven by different analysis, technical analysis, fundamental analysis, sentimental analysis, and many more. So we'll be guiding you step by step on how to do this. And this is for the time period of October 21st to October 25th, 2024. If this is your first time, please smash the like button, share your comments as well. And today's series of market fundamental and technical breakdown is very unique. It is unlike the other series I've been doing because we're going to be diving deeper today. We're going to be much more focused on just few pairs, but we'll be diving deeper. So it is going to be more educative, it's going to be more insightful, and it's going to be a new approach to our technical breakdown. So I want you to watch to the end. I'll share my screen right now, so we dive into it. Okay, so right now you're in my screen, my second screen, and this is the Euro USD chart on the monthly time frame. We'll be focused on just three pairs, okay? Euro USD, AD USD, and BTC USDT, okay? If you want me to add any other pairs that I'll be analyzing this way, breaking it down deeply, I want you to comment below the pairs you'd like me to add. But for now, I'm focusing on these three pairs, the Euro USD, AD USD, which is the Forex pair, and then BTC USD, which is the crypto pair. So let's dive into it. So on the monthly time frame on Euro USD, what do we see? We see that the market is on a bearish channel, okay, creating lower lows and lower highs, creating lower lows and lower highs, lower lows and lower highs, lower lows and lower highs, lower lows and lower highs. Okay, that's what a bearish channel is. And this is the monthly time frame. We also did a Fibonacci retracement calculation, taking it from the swing high of the previous high of the monthly time frame and to the swing low of the previous low of the monthly time frame. And we figured out that the market got to the 62 Fibonacci retracement point and had a first touch and also had a second touch. So this second touch is in confluence with what this monthly channel. It is in confluence with the monthly channel. So there are two touches at a monthly channel and two touches at our 62% Fibonacci retracement point, and then the market started dropping to the downside. So if you can see, throughout this month of October, we have been having a bearish candle for the monthly time frame. That's just what I want you to understand. We're on a downtrend, and the market is bearish on the monthly time frame. Then let's go to the weekly time frame. On the weekly time frame, we already marked out our areas of reversal, areas of liquidity over here, area of reversal, which is this ash labeled zones, okay? So I marked them out on the monthly time frame though, but it has a confluence with the weekly time frame. So for the weekly time frame, we look for chart patterns, okay? We look for chart patterns. And for the weekly time frame, the particular chart pattern I see on this weekly time frame is a double top formation. You see, the first touch here and the second touch here, okay? The first touch here and the second touch here. So, but after that, the market really didn't hold further. The market started dropping to the downside, which signifies that yes, October we have been having bearish weeks. Even last week was bearish. The previous week before it was bearish, and the first week was bearish. Okay, so this week, what could it be? Okay, so we're trying to literally analyze the market and know the actual direction the market is probably going to go. So on the weekly time frame, what other chart patterns can I see? What other chart patterns can I see? Okay, what other chart patterns can I see? I can see that overall, this market is trending to the downside, and this is a consolidating market over here from here to here. This market has been consolidating. It has not been trending based on the weekly. Okay, based on the weekly. You see, a trending market is meant to be trending this way. It's meant to be moving this way. Okay, this is when you're saying the market is creating high highs and high lows, bullish market. But on the monthly time frame, what do we see? We see the market was trending to the downside, bearish. Okay, so buy for the weekly time frame, the market is what consolidating. Market is consolidating, no actual trending direction, just consolidating. So the approach to consolidating market is you buy at the support, you sell at the resistance. Okay, you buy at the support, you sell at the resistance. So that is the actual trading approach for the weekly time frame. So let's see where is the resistance here for this weekly time frame. This is the first touch. This is the second touch. Let me delete this. Okay, no. Yeah, so this is the second touch that made the double top on the weekly time frame. Okay, so let us search for the support levels on the weekly time frame. Since we already know that the market is consolidating, let us search for the support levels on the weekly time frame. So the area where I see massive reversal on this weekly time frame, it is large, but literally this area, there is massive reversals this area. There's also another reversal. There are reversals at this area. So I'm trying to get the highest possible area of reversal where there is more touches. Okay. So this is the first one, this is the second one. So based on what I see, on the weekly time frame, since we're in a consolidating market, the market is likely heading for what resistance, selling for resistance, heading to support, so that we can now find what buys. So this is what I see for the weekly time frame. Then let's go to the daily time frame. The daily time frame. On the daily time frame, we look for the prevailing trend. The prevailing trend. So basically, we see that this market was actually trending to the upside here. Created this low. This is the first low, high, low, high, low, high, which is what's an uptrend. So after that, the market was created the first impulsive leg to the downside. Okay, the first impulsive leg to the downside and broke this trend line. Okay, so if you are part of my Telegram group, you remember when I called out sales from here and we bagged it about 80 pips. We bagged it. We called out sales from here, 20 pips stop loss. We bagged about 80 pips on one single trade. And I saw that because I knew the prevailing trend on the monthly time frame. I knew the current situation on the weekly time frame, and currently down to the monthly daily time frame, a prevailing uptrend has been broken. So the sales were in. The sales were in. So with that said, now we are looking for what a possible means of still what getting into a trade. So because this is the first impulsive leg, the market does not just move in one direction. If you can see over here, when the market wanted to move, this is an impulsive leg. The market does not just move in one direction. This is what under what impulsive leg. This is under what in it's over here. This is an impulsive leg. So after this impulsive leg was created, there was what a correction. And after this correction, the next impulsive leg is what's coming. So that's exactly what I see that could likely happen here. This is an impulsive leg. Okay, after this impulsive leg, a correction is going to come. After this correction, the next impulsive leg is going to play in as well to complete the movement down to the support level on the weekly time frame. Okay, to complete this movement, this is around 400 pips move. So this is the move, okay? 400 pips move. From this area where I called out the sell, it was the 400 pips move, okay? And for traders, you know what 400 pips is. So let's go down better. Okay, but before I go down more, we see here on the daily time frame that we have an area of support over here. We have an area of support, an area of reversal, which is also what an area of this trend line. This our trend line, uptrend line. Okay, it is a point where market got to and reversed. Okay, so since this particular zone here, this engulfing candle here, okay, this candle here is an engulfing candle. Since this particular zone here is a significant area of reversal, there is chances psychologically that when the market comes back to this level, 1.07900, I repeat, 1.07900, which is the psychological level, there's going to be a reversal to the upside. There's going to be a reversal to the upside. And when that reversal happens, it is going to be a corrective reversal structure for us. So once we get the market to get to this point, we can now get a reversal, which is what? A reversal trade. Well, you know, the prevailing trend is what? It's still on the sells, on the monthly, on the weekly, and currently on the daily, we are still expecting sales. Why am I still expecting sales? Because the market has not gotten to that demand level yet. So the market needs to come and take this previous week low. This is the previous week low. This is the previous week high. It's going to take this demand level here. Okay, once it gets to demand level, then we can now start looking for that towards reversal. So this is what I see on the daily time frame. Okay. So with that said, let's go down to the 4 hours time frame. On the 4 hours time frame, we see that the market is smoothly running on this downtrend, smoothly running, no obstacles at all. Okay, smoothly running on this downtrend. Is it a channel? Let's see. Yeah, it is. It is on this channel, but let me adjust it. Smoothly running on this downtrend channel, and if you look closely, you see that here is the previous week high, this is the previous week low. And like I told you, we're expecting the market to come and take this previous week low, sweep this previous week low, get into our psychological level, and then we move to the upside, probably towards this previous week low, because it is more like a reversal. No, not a reversal, a correction, not a reversal. A correction is that it is just what? Changing directions for a short period of time. A reversal is like it is changing direction for a long period of time. We have a total reversal from uptrend, okay, to downtrend on the daily time frame. You can see it. But on the 4 hours time frame, we're looking for a correction, which is changing from sells to buys for a corrective moment. Then we continue the sells. Okay. So this is what I see currently on the 4 hours time frame. So basically, I just think that the market is going to drop, get to this point, and then move back up. So this is my bias right now for Euro USD. Okay, this is my bias for Euro USD. And if you can also spot, this is a significant area of reversal. This is the resistance level. This is the resistance level. So for me, and I can see the market to be dropping to that. It's already dropping. It's already dropping. So for those day traders, you can look out for your entries. Okay, look out for your entries and please try to apply proper risk management. Try to always apply proper risk management. Okay. So literally what I just called out for you guys is about how many pips. Let's say you try to take it safe and give yourself 20 pips, aiming for the previous week low. Let's say roughly 40 pips, 1:2. 40 pips, 1:2 is the trade. Early morning breakfast trade. 1:2 Euro USD. You can place it. Probably I'm going to place it right now on this call on my account. Don't forget to apply proper risk management, guys. Don't forget to apply proper risk management. 20 pip stop loss and 40-50 profits on Euro USD. Okay, I just went in with half lot because I expect market is going to have some kind of retest. Okay, the market is going to have some kind of retest like this before. It's going to give those intraday traders a much better entry. Okay, because if I should look closely on this chart, I see there is more like a support level over here. See that? So we can still expect market to come back within this consolidated area, before we move down. Okay, so we can still expect market to come to within this consolidated area before we move down. So that's why I entered with half lots. Once it comes over here again, over here, you can get another trade entry. Okay, to the downside. So this is literally how you can trade the market. And remember, this is a downtrend channel. This is a downtrend channel, okay, on the 4 hours time frame. This is a downtrend channel, 4 hours time frame. So we're selling from the downtrend channel because you know that exactly the trend is what is a sell, is a sell trade or probably a downtrend trade. So we sell one at a resistance. This is a previous resistance. It resisted the market. This is market over here, resisted market over here, resisted market over here. And also we have a downtrend. So we have it is aligned. It is aligned. Okay. So if you, any little pullback you get, you can still enter the sell. Okay. So let's go to the next pair, which is AUD USD. AUD USD. Let's start with the monthly time frame. So on the monthly time frame AUD USD, I already marked out the prevailing reversal points here. Mark out these reversal points here. Mark out these reversal points here. Mark out these reversal points. Okay. This reversal point here and this reversal point here. So let's go to immediate reversal areas. Immediate reversal areas. So for the immediate reversal areas, what do we see? We see first of all that this is resistance, immediate support, immediate resistance, over here, resistance, and here, once again, resistance. That's not just it. Over here as well, you see, these are immediate what support, these are immediate what support, these are immediate what support, these are immediate what support within the current market trajectory. So if I should adjust this trend line, because I can also see a trend line. Okay, this is how it's meant to be. What I adjusted was this. There are meant to be two touches of a trend line. This is the first touch of this trend line, and this second touch of the trend line. Okay, so and thirdly, what do you see? We see that the monthly time frame, the candle is what? Bearish, respecting what? A resistance area, one, and also respecting what? A trend line, two, sells. So let's go to the weekly time frame then. So down on the weekly time frame, what structure can we see? What chart pattern can we see? What chart pattern can we see? You can see what? A consolidating chart pattern, a consolidating market chart pattern, because the market is literally not trending. Literally not trending. It is ranging, just like we saw in Euro USD is the range of this chart pattern. Let's just use this yes. So based on the chart pattern we see, it's a ranging chart pattern. And most times based on principles on trading a range, okay, you sell at the resistance and buy at the support. Take profit at the 50% of the range. Take profit at the 50% of the range. I repeat it again. Take profit at the 50% of the range, not really holding it to the bottom of the range. So what does that mean? Taking profit at the 50% of the range is, let's take a Fibonacci from this swing low to this swing high. Once you took Fibonacci from this swing low to this swing high, what do we see? We see that the 50% of this range is over here. The 50% of the range. This 50% of the range is over here. Okay. Then we take profit at 50% of the range. So this is literally what we have seen, that the market is ranging on the weekly time frame. Okay. Then let's go to the daily time frame. So what's on daily time frame? What do we see? We see that the market has what an immediate uptrend on the daily time frame, but the trend has broken. Okay, so the market had an immediate uptrend. Okay, this is the trend. From this low, the market created a high. From this low, yeah, the market created a high correction and that high, and then the trend got broken. The trend got broken, which is a total what reversal, not correction, reversal. So this is literally what we see. So also on the daily time frame, what do we see? We see that there is a major support area over here on this candle. There's a major support area here on the daily time frame. A major support area. A major support area. Okay. So since there's a major support area on this daily time frame, you can expect that market once gets there, there's going to be a what? A reversal. And we also had a point. This is the point of what the second leg that pushed the market to the upside for this uptrend, which is also will have an engulfing candle, which is a demand zone. Once the market got to this point, already I think it got to it to some extent, and then we are going to expect what more push to the upside. So this is more like a corrective structure because what we are trading now is this. We're trading to the 50%. So if the market gets to this demand and we see this correction, we still expect what market to come and drop down towards this was 50% of the range. It could go more than 50% of the range, but we're just trading with principles, okay? Something that has happened in the past continuously. We're trading with such occurrences, so it will happen continuously because market is a probability. It's based on probability, okay? The market is based on probability. So this is literally how it works, okay? So the next is the 4 hours time frame. 4 hours time frame. So literally on the time frame, we really have a spec of direction. Then on the 4 hours time frame, what do we see? This is the previous week high. This is the previous week low. This is the daily demand area we're expecting. And then we also see what the 4 hours demand area over here as well. And also within this previous week high, we see a 4 hours resistance area as well, together with a daily resistance area as well. So what we expect now is market to come back into this demand area, okay, into the demand area. Probably it could take the low. Probably it could do this, take this low before we see what the corrective, because this is an area of reversal on daily time frame. So we're going to see some reactions, okay? So after that, we can now start expecting this long push. But for this week alone, this is what we're trading. We're trading just this move for this week. The bias could change if we see that the market comes and has a massive break like this. That's when the bias could change, and then we could get something like this. The bias when the bias could change, we get something like this. Okay, but based on probability, I don't see this coming soon because of that daily reversal point which we have over here. This daily reversal point which we have over here. Okay. So that's literally what I see currently for the AUD USD pair. Come over here, respect the reversal point. Then we get this up push towards this previous week high. Okay. So it's going to grab the previous week high, probably not even going to close at that previous week high. It could form a doji on the weekly time frame. So that's what I see currently for the AUD USD. Then and you should as well see this. I just wanted to point it out to you guys. As well, see this is a downtrend. Downtrend is a channel. Okay, so needs to have touches. This is the channel touches. Okay, so this is literally what I see currently on AUD USD. Then the last on the list is BTC USD. BTC USD. So for BTC USD, let's start from the monthly time frame. On the monthly time frame of BTC USD, we see that the market has surpassed the all-time high. Currently, as this live stream is going on, this is the all-time high of BTC USD as at November 2021, which was around the $69,000 per Bitcoin. $69,000 per Bitcoin. So literally, we can see that the market has been moving to the upside. For Bitcoin, we can see that the market has been moving to the upside. Okay, if I should connect the points, this is meant to be the connection. Okay, so for the uptrend for on the monthly time frame. So the area of reversal mostly for Bitcoin this year is around this area. Okay, that's where we have area of reversal whereby market started pushing to the downside. So on the monthly time frame, what do we see? The market has been what? Bullish. So you know what we're looking for. Then on the weekly time frame, we look for chart patterns. So on the weekly time frame, we see an expanding wedge. This is an expanding wedge. Okay, this is an expanding wedge, which is forming like this. Wait, let me show you guys. This is an expanding wedge. It's accumulating both buys and sells. Okay, so literally an expanding wedge is meant to break out to the upside. That's the strategy of trading an expanding wedge. That's the principle of trading an expanding wedge. Then on the daily time frame, what do we see? On the daily time frame, we see that the market has approached a very significant area of reversal, turning point, a very significant area of reversal, which is over here. The market came to this point, touched it with a wick, and then went down. Over here, the market came here, touched it with a wick, and went down. Over here, there's a significant area of reversal. And if you can see correctly, we are still on an uptrend though, on the daily time frame because we use daily time frame to check the prevailing trend. So if you check the prevailing trend of the daily time frame, this is the prevailing trend line. Okay, this is a prevailing trend line of the daily time frame. So if you see, the market has gotten to an overbought situation, which also has a resistance over there, which is a reversal area. So from the daily time frame, I expect that the market is going to what, have a little break, not break out. I said like have a pause on the up move, okay? But the market could react any single way. I'm not controlling the market, okay? The market could react in a specific way. But based on what has happened in the past at the current point where the market is, and based on what I'm seeing currently on the market, is that the market on the daily time frame is on an what's uptrend, is the prevailing trend, and it is continuous. It's not that the trend is having a reversal, changing from buys to sell, but we can literally have a correction, okay, changing from buys to sell, okay. So this is what I see. So on the 4 hours time frame, we see that the market has gotten to this particular resistance area, and there is confluence of four different confluences there. The first confluence is this is the line I drew on the weekly time frame that marks the top of this expanding wedge. The second confluence is that we have a daily resistance area there. The third confluence is that we have a 4 hours resistance area there, and the fourth confluence is that we have what, a resistance area there marked out, a resistance zone. This is the zone, okay, which is on the 4 hours. The total reversal, you can see once the market got to that zone, we had a massive drop, massive drop, massive drop. Okay, once the market got to this zone, see, we had a massive drop around minus 29% drop on Bitcoin. So it has happened in the past, and the market has got to that area again. Two things is expected. Markets should either respect that zone and come back towards this what, demand zone, to build momentum to break this zone for that. But if markets chooses otherwise and says that yes, we have the momentum we need, it could literally break their diff and then continue to move to the upside. Okay, so but my bias right now, because of this massive push which we have seen, this is a massive push we have seen, okay, from here up to this point where the market is around a 18 pips gain, 18% gain, 18% gain for BTC USDT. So since the market is currently at a resistance area, if I see any change of structure and the market wants to sell, then I will know that yes, we are just going for a correction. The correction could be deeper because remember, this is the daily trend line. So the correction could be deeper because I already marked out this second demand zone, okay, for the market to come back into this. So the correction could be deeper, and then from here, we can now start pushing to the upside, or the correction could just literally what, be little here, and then grab momentum and continue to push to the upside. Remember, the US election is coming in about 2 weeks or so, and there's going to be volatility, massive volatility in the markets before the election and after the election. And the election could be one of the reasons why we're going to see a massive breakout on Bitcoin and high momentum if the expected candidate is chosen. If the expected candidate is chosen, I will not mention names, but if the expected candidate is chosen, then we're going to see some massive rallies. Like Bitcoin is going to be on fire. So let's watch out and see how that goes. So let's go into the weekly fundamental analysis. But before I go into the weekly fundamental analysis, a lot of you guys might be wondering, man, like I broke this down very, very well, that you've never seen the market being explained this way, and you would like to learn how I do this. So we have a website. It's www.stensdigitallane.com. This is the website currently displayed on your screen, and the link is going to be on the description. Okay. Then just click on the link, go to the website, and you read about everything we do. Like I told you before, we teach you about digital trading. We break it down for you to understand very, very well. And these are our prices. We have the free price whereby you can just check out the website, see the interior, see how it is, that it's actually authentic. Then you can then go in for the basic price. On the free classes, you have some courses there, but it's free. It's just to help build your mindset that you need to invest in yourself to be able to change your level of income or change your current level or situation. Okay. So you can also reach out to support. Support is here. And literally support is going to be an AI. Okay. It's going to reply to you. And if the support does not know how to handle your situation, it's going to then recommend you to a live agent. So just hang on to the support, give the support the necessary details like your email, your name, your phone number to pass it on to the agent, and then the agent can reach out to you directly and guide you effectively. Then this is the monthly, the 3 months price, 3 months price. This is the 6 months price. And what you gain access to, you have full access to our 10x digital link course on trading, on real estate. You also have live access to our trading webinars. You also have access to our pro trading signals we send in our Telegram and WhatsApp. You also have access to our partner softwares and tools we use to trade and our advanced trading resources inside our website. And then you renew this monthly. There's no discounts on this, but if you want discounts, you can get discounts on this 3 months, 6 months, and on the 1 year. Okay, so that's literally what you get. So let's dive into the fundamentals. These I'm reading this from an article on Forex Live, okay? And it is the weekly market outlook for the 21st to 25th of October. And we have a pretty empty week ahead on the data front with the Bank of China rate decision and the flash PMIs being the main highlights, okay? So we have on Monday today the the PBOC, Bank of China rate decision, okay, which has to do with interest rates. Then on Tuesday we have the Canada PPI, Producer Price Index. Wednesday we have the Bank of China policy rate. I think this is a meeting. Then this is the rate decision on Wednesday, Bank of China. Anything that happens to China affects Australia. Yes, anything that happens to China happens to, or affects Australia. Why? Is because they work with the same time zone. Okay, they work with the same time zone. When China is awake, people in Australia is awake, people in New Zealand is awake. So any news that is done in China will affect Australia. So this is policy decision, which has to do with interest rate. We're going to read more details for that. So on Thursday, we have the Australian, Japan, Eurozone, UK, US flash PMIs. Thursday is going to be another high impact news. Like you can see here, the flash PMIs is one of the main headlines for the week. Then we have the US jobless claims data on Thursday as well. Then on Friday, we have the Bank of China MLF, Tokyo CPI, Germany IFO, Canada retail sales, and US durable goods. So we're going to go and read more about this China decision on Wednesday, and then we'll read more about Thursday. So we just have a specific, we want to tailor down our focus. Let's tailor down our focus. Wednesday, where are you? Okay, so this is Wednesday, and this is, I'm sure this is the same Bank of Canada. Let's check. Okay, yeah, that's it. Okay, so it says that the Bank of Canada is expected to cut interest rates by 50 base points. I'm not sure it's meant to be Bank of Canada. And being the policy rate and, bring the policy rate to 3.75%. Such expectation were shaped by Governor Maclean, mentioning that they could deliver larger cuts in case growth and inflation were to weaken more than expected. Growth data weren't that bad, but inflation continued to miss expectation. And the last report showed the 50 base points cut. Looking ahead, the market expects another 25 base points cut in December, although there are also chances of a larger cut and then four more 25 base points cut by the end of 2025. So this is for Bank of Canada. Okay, yeah. So this year, which is BOC, not Bank of China, it's Bank of Canada, BOC, is Bank of Canada. So we're expecting rate cuts on in Canada, not China, okay, on Wednesday. Good. So then on Thursday, we have the flash PMI day for many major economies, with the Eurozone, UK, and US PMIs being the main highlights. The Eurozone manufacturing PMI, which is 45.3 expected versus 45.0, which is good. Why it is good is because analysts are expecting 45.3, but the previous figure was 45, so which is high, which is good for Euro. Then on the service PMI, we have 41.6, which is good, which is higher than 41.4. Then on the UK side, we have 41.4, which is expected, against 41.5, which is bad for the manufacturing PMI. Then on the service PMI, we have 52.4 against 52.4, which is neutral. Then for the US, we have the 47.5 against 47.3, which is good for dollar. And then for the service PMI, we have 55.0 against 55.2, which is bad for dollar. So literally, I'll be focused more on the Euro zone manufacturing PMI, and I'll be going for buy opportunities for the Euro zone. Probably that could be the day that we'll see the major buys. So by what time is this news going to be announced? So the Canada news is going to be announced by 2:45 p.m. West African time. Okay. The report is going to be done by 2:45 p.m. West African time on Wednesday for Bank of Canada. So literally we'll be trading New York session live on Wednesday. And then on Thursday, we have the service PMI, which is the Euro service PMI and manufacturing PMI, which is starting by 8:15. The highlight is starting by 8:15 on Thursday. So we'll be trading London session on Thursday, Wednesday, New York session, Thursday, London session. So get ready, guys. I already gave you guys the view in the technical aspect. I gave you guys the view in the fundamental aspect, and I gave you guys an opportunity to trade with me live. So don't miss this opportunity. Join our Telegram. The link is going to be on the description. Join our WhatsApp, our social media handles. The link is going to be on the description, so you don't miss any of these trading opportunities, whereby you can be live with me. I'll explain the markets, show you my view, place the trade, apply proper risk management, talk over the trade, and then see the money roll in. Okay, so thank you so much for watching to this point. Don't hesitate to smash the like button. Comment below your favorite pairs you'd like me to handle next, and then as well share this with your friends and family who are traders. Have a profitable trading week. Peace.